world, new currency. Will the financial system be resilient as digital currencies proliferate? I'm excited to introduce the moderator of this discussion, Mr. Matthew Blake, Head of Financial and Monetary System Initiatives, World Economic Forum. Matthew, thank you very much for joining us today. I will let you introduce the speakers and navigate the discussion.
Fantastic. It's a pleasure to be here with you. As you said, my name is Matthew Blake. I run the Financial and Monetary System platform at the World Economic Forum. It's great to be part of Polygon and also to moderate what I hope to be an excellent 30-minute session with all of you today. The session title is New World, New Currency, How to Make the Financial System Resilient as Digital Currencies Proliferate. Maybe just some opening views here. Digital currencies are becoming a pervasive force across the global economy, revolutionizing everything from cross-border payments to interbank transfers. The rapid adoption and decentralized nature of digital currencies pose unique and unprecedented challenges for financial authorities, tax authorities, capital market regulators, and the business community as they navigate a very influx space. Here to help us make sense of all of that, we are delighted to have three terrific speakers. First, Alexei Zabatkin, who's the Deputy Governor of the Bank of Russia. Mark Barnett, President, Europe for MasterCard. And Matthew Dill, Senior Vice President, Global Head of Strategic Partnerships and Ventures at Visa. Warm welcome to you, gentlemen, and thank you so much for taking the time for being with us. I want to start first with a more of a contextual question here and get your reflections on the evolution of digital payments. You know, we've gone through a very challenging 16, 17 months here. Many would argue we're not out of the woods yet as it relates to COVID-19. Health concerns, lockdowns, other considerations have pushed consumers further away from cash. Digital transaction volumes are on the rise. And I'd love to understand, I'd like to spend a couple of minutes on this topic because it's a bit of a seismic shift for everyone here. Matthew, maybe I start with you. Nice to have you on with us.
Yeah, pleasure.
Has the pandemic fundamentally altered consumer behavior vis-a-vis payments, in your opinion?
Matthew, thanks for having me. Pleasure to be on the panel. You know, I think from Visa's perspective, absolutely. You know, when we, I think if you sort of look back at the history of digital payments or digital currency, in some respects, money was digitized before people were. You know, if you look at the, international financial systems, banks, ledgers, really how numeric values have been used in computer systems, this has been going on for, 60, 70, 80 years, depending on, where you look at the starting point. What I think is, has really sort of begun to transform things is that the consumer over the last 20 or 30 years has become the digitized entity. People have electronic devices, they have, computer access, mobile devices, and other things. And, the pandemic over the last, 18 months has really accelerated a shift that, we think will put in place new behaviors which are here to stay. If you just look at Visa's business, we work on a global basis as a payments network. We saw face-to-face interactions drop back to what we would call sort of 2017 or 2018 levels in terms of people having face-to-face interactions. And we saw the digital interactions, those that were remote or on delivery or e-commerce oriented, jump forward to numbers we didn't expect to see until 2023. And I think if any of us look at sort of our own lives, we can see that things like interacting with physical retail merchants using contactless technology or interacting online, ordering ahead and picking things up, mean that real digital experiences have just become embedded in our everyday behavior. So we think that that's going to continue, and we think that the technologies, the digital currencies that feed or support that, are going to become a really important part of the the next the decades ahead.
Thank you, Matthew. Mark, I want to have your perspective here too, from MasterCard. some of the forces, just broader digitalization across the global economy, more people participating in that. What are some of the forces that you're seeing from MasterCard, and how do you see these forces shifting and evolving the payment system in the future?
Well, very similar to what Matthew just said. What we've seen is a huge acceleration in digitization or electronic payments, but not just electronic payments, in digital lives or digital first lives that we all lead. The adoption of mobile banking apps, the rapid increase in retail e-com has gone through the roof. Obviously, they've got to take the travel sector out of that. And also, things like contactless. We now have 85% of all in-person transactions are contactless in Europe. And that then means that you can start paying using one of these. Russia actually leads the world in its adoption of tokenized-based payments. And, we're modernizing the existing card payment system all the time. We started off with, I'm old enough to remember, zip-zap machines, and then we put a mag stripe on a card, and then it went to chip and pin and contactless, and now it's all turning into tokens, not just on the issuing side, but also on the card on file, the merchant token vaults. So all the time we're evolving electronic payments, and consumers have voted with their cards or their phones or their buttons, because we have seen a very rapid deceleration of cash usage. At MasterCard, we've got nothing against cash, and I think cash will be around for a long time. But if we can provide electronic solutions that people find safe, simple, secure, then they're going to adopt them, and that's what we've seen we've seen happening over the past 5-10 years. But the acceleration, I think I read somewhere that we've had 5 years worth of acceleration in the first 5 months of the pandemic, and I think that's very true.
Thank you, Mark. Yeah, we've absolutely heard about this step function in acceleration, as you've said, of digital adoption. Alexei, with a lot of pride, Russia is at the vanguard of many of these trends. From the perch of a central banker, how do you see the role of your institution as a facilitator, and in some instances, perhaps a catalyst of this transformation? What are some of the opportunities and risks that you're focused on, building on Mark and Matthew's initial comments here?
Yeah, thank you very much. My comments will be very brief. I think that indeed the central banks have, as the stewards of the reliable monetary system, shall be at the center of the changes which are happening to the payment landscape and the evolving and broadening functionality of money in the increasingly digitized economy. As Matthew said, that kind of money were digitized earlier than people. So now we ought to make sure that the money don't fall behind the digitization of the people and businesses. As we know, the central banks are quite active in devising new payment solutions, the fast payment systems to facilitate indeed more seamless and cheaper payments options. The very vanguard of the technological change to the monetary systems is the whole discussion about the central bank's digital currencies, something which we probably touch upon at greater length later. And of course, the central banks have to actually play an appropriate regulatory role in this current, in the fast changing environment, to make sure that the monetary system remains robust and financial stability is preserved, notwithstanding all the innovations in the monetary landscape.
Absolutely. And balancing that tension between innovation and financial stability is always one of the most interesting facets of your job. There's no doubt about it. I want to make a bridge now to digital currencies as a piece of a broader puzzle. All right. MasterCard, very interesting study not that long ago that looked at digital adoption, specifically in jurisdictions like Kenya, where I believe the statistic was a whopping 77% of respondents saying that they've had experimented online with various forms of online payments. there was also a significant proliferation in the growth of digital wallets. And another piece that came through, which is something that we'd like to grapple with a bit here, but a willingness to transact in cryptocurrencies as being part of this overall evolution. So Mark, maybe I can start with you. Like, when you think about digital money broadly defined, right? Broadly defined, how do you see it playing a optimizing role for the global financial system?
Okay. I think first of all, we've got to start with a bit of a definition here, because account-based money, the money that sits in my bank account, is digital money too. But I don't think we're talking about that. I think we're talking about digital currencies. And so let's break those two words down. A currency needs to be three things. It needs to be a unit of account, a store of value, and a means of exchange. And we see the digital currency horizon again in three parts. There are central bank digital currencies, there are private stable coins, the most famous of it being DM, or formerly Libra, and then there's free floating cryptocurrencies, again the most famous being Bitcoin. The first two of those pass my currency test to greater or lesser degrees. The third one doesn't pass the currency test because of a store of value. It's extremely volatile. So it's not a case with CBDCs and stablecoin. I don't think it's a case of if, it's a case of when. And then the question becomes how. And that's where I think, as Alexei said, central banks have a very, very strong role to play, both in regulating the private stablecoin, but also in setting up the appropriate kind of CBDCs, which are going to enable the commercial banking sector to flourish in the way it does and perform in the way it does, i.e. a two-layer system of CBDCs. We can get into that a bit later, but often people talk about, digital currencies as a solution looking for a problem. I don't agree. I think eventually we will evolve to a two-tier world of account-based money and token money, if you like, one being digital currency and the other being the account-based money that we all have in our current accounts today. I do think there's probably a big role in financial inclusion as well.
Yeah, I appreciate you ending on that last note there. Given the fact that, as you had said, oftentimes digital currencies are in search of a problem to solve. I think one of the pieces that we consistently hear are the potential benefits of digital currencies in helping bring people that are not in the formal financial sector online. Those are the unbanked and underbanked. Matthew, Visa and MasterCard have been, I think it's not an exaggeration, absolute proponents of financial inclusion, fighting for that around the world for a number of years here. How do you see digital currencies playing into that driving force, getting those 1.5 billion, 1.7 billion, whatever the magic number is there, of folks that are not included into the fold of the financial sector?
Yeah, great question. I agree with you. I think both networks have been proponents of really trying to expand the footprint of people that can interact, electronically with money, and that's been a theme for both companies. What I really liked, sort of Mark's breakdown. I think it's really important to look at those three categories. Cryptocurrency sort of as an asset, stable coins as really an emerging platform for commerce, and then the early stages of central bank digital currency, what central banks are working on. One of the things that I think is probably worth noting is that while cryptocurrency is not a good platform for commerce, because of the volatility, it is drawing a lot of developers and a lot of interest into digital currency as a concept. And so a lot of innovation is happening around cryptocurrency, and that's being reflected, I think, in a lot of the wallets around the world that are enabling people to buy, sell, or store cryptocurrency. And I think that's interesting, and we should take note of it because, while it doesn't necessarily pave the way for cryptocurrency becoming a foundation for digital inclusion, it does mean technological innovation is happening, and developers and others are learning how to do things. Probably more interesting for expanding access is what's beginning to happen with stablecoins. We work with about 160 different wallets around the world, from sub-Saharan Africa, Southeast Asia, Latin America, and then those that like companies like Apple or PayPal, that are sort of Western-based models. And one of the things that we see in these wallets is that they are serving underserved communities regularly. They're making it easier for people to pay bills. They're making it easier for P2P transactions to happen. But one of the challenges with them often is that they're not interoperable. They are, a brand starts the wallet, and then the brand works on creating a ledger system that is proprietary to that brand, whether that be a mobile operator or let's say a marketplace platform. And so if you imagine, I think, stable coins, beginning to move up into that environment, you can see a standard emerging where these platforms could become interoperable. And I think that it paves the way for central bank digital currency at some point to come in and begin to set fiat-backed government, issued, legal tender, and that to be very rapidly adopted in some of these markets. And so I think all of these things, while they're very different, are playing a role in sort of opening up access. That's one of the reasons why at Visa, we've really focused on making sure that we're working with all of these in sort of a tangible sense along the way. Our view is that over time, when central bank digital currencies come into play, when they're more widespread, there's going to be an infrastructure in place. There's going to be standards, and a lot of this will be able to work more easily. And then the only thing I'll just say in closing is that we have to be cognizant that a digital currency can't be a solution for someone who doesn't have digital access. So, while we still have an imbalance, we probably have greater digital penetration than we have financial service penetration in many markets. It's not a silver bullet for that. And so you still need to have cash. You still need to have alternate methods in every economy for supporting these populations.
Yeah, excellent broader point there. I want to make a bridge now to CBDC. It's come up in a few contexts. Alexei, I'm coming to you on this. A lot of fanfare, anticipated rollout, planning by central banks around the world on central bank digital currency issuance. For the Bank of Russia, what are your plans for digital ruble? What considerations are you weighing as you venture and study this space? Take us into your boardroom, if I may, and help us understand some of those factors that you're contending with.
And thank you. Of course, the process of thinking was much longer than 30 minutes we have for this session, so I will do my best to sum it up. The Bank of Russia published the consultation paper on the digital ruble last October, and the digital ruble concept document was released in early April this year. The digital ruble, as any central bank digital currency, is considered to be the liability of the central bank. This makes it very similar to cash in circulation from economic standpoint, but the digital ruble shall be more convenient than cash is in its use. It will provide ability to consumers and businesses to execute payments 24/7 and do it remotely. This is what makes it similar to existing electronic payment solutions. An additional feature of the digital ruble, which sets it separate from either cash as we know it or electronic-based bank money, will be its tokenized form, something which Mark and Matthew already alluded to. The digital ruble will exist in the form of uniquely identifiable units. You can think about them as sort of electronic banknotes. This will permit better traceability of payments and money flow, and also explore the possibility of setting conditions on permitted terms of use of a given a unit of currency, and that will, just imagine that you are able to give your kids some pocket money in digital rubles, and then restrict their use for purchase of junk food, for example, right? That could be a useful functionality for a customer, and of course, you can come up with hundreds of other similar use cases. Now we see the digital ruble implementation as a two-tier system. The Bank of Russia will maintain the centralized ledger on the Bank of Russia's technological platform, and all transactions will be recorded on this ledger. But customer relationship, and that is very important, the last mile access will remain in the hands of the commercial banks, plus possibly other authorized and properly supervised payment service providers. They will integrate access to digital ruble wallets into their apps, will handle KYC and onboarding of new users, and will very much count on it, will devise new products and services which exploit innovative functionalities of the digital ruble, which I just mentioned. And to conclude, let's recall that at the heart of it, money is a technology which purpose is to lower transaction costs in the economy. Currently in Russia, even with very high speed of digitalization of payments, the costs of payments remain quite high. They take the form of bank fees and acquiring fees. Not all of them are even visible or fully recognized by the consumer. The digital ruble, in our view, will provide people and business with a very basic but uniformly and cheaply accessible alternative to electronic bank money. It will be up to the users to choose between the use of the electronic bank money or the digital ruble, as today they choose between the electronic bank money and cash. But it shall increase competition and will create a more level playing field in the payments industry, and the result shall be a lower cost and hence a more efficient money technology for economic agents.
Yeah, excellent. Thank you so much for that. So many considerations, really great opportunity there. I want to go across the globe here very quickly to Central America, a small country, 6.5 million in population. I'm referring to El Salvador. They made a seminal decision to make Bitcoin legal tender for the nation. This has gotten a lot of praise from certain circles and a fair amount of skepticism from others. I'd love to take the temperature here. I have a general sense of where things may shake out, but let's see. Was this a good idea, a bad idea, something in between? Mark, maybe I start with you. You know, both MasterCard and Visa have operations on the ground. What does it mean for you guys in terms of doing business in El Salvador? Help us understand what your thoughts are.
Okay, so look, just to be clear, we already have crypto card products, but we're not transacting in crypto. You know, I have a wallet. I'm able to in real time transfer my Bitcoin into a fiat currency, and then all the transaction happens in the regulated KYC AML world that is electronic payments. And people often confuse that with actually transacting using a cryptocurrency. It's not the same thing. So we're looking, you know, El Salvador should do what El Salvador wants to do. That's not for MasterCard to comment on. We'll be looking at it very closely. As far as it affects our operations, it doesn't really, because there is card acceptance in the country, there's card usage in the country, and that will continue. You know, our focus is on we think the first out of the gate will be stablecoin, private stablecoin. I think they're just a little bit ahead of central bank digital currencies. You know, we're working with a lot of central banks around the world. We've got the MasterCard CBDC testing platform, a sort of sandbox for central banks to come and play in. But our focus is on stablecoin because of their close alignment with our principles of consumer protection, regulatory compliance, price stability. So, you know, that's what's important to us. I think that's what's important to everybody here. And what Alexei was just saying about CBDCs, I couldn't agree more. I think increases competition in the market, creates a very important role, or continues a very important role for the central bank in not just issuance of currency, but regulation of it. And the two-tier system, the final mile, is where MasterCard and Visa have always operated anyway. And again, people can choose to pay with a token that's a card-based, account-based money, or it can be central bank money. And that's going to be a choice for consumers, and it increases competition and choice.
Thank you. I want to come, and Matthew, I'm coming to you here, but I know there's been recent developments between Visa and USD coin. I want to come to that in a second. You can sort of help us understand the perspective there. But again, back to El Salvador, similar views as held by Mark. Like, do you differ in the perspective shared there?
Similar views. I think, you know, if you look at, let's say, the countries of the world on a spectrum, you know, what El Salvador has done is probably on one side, that's taking a cryptocurrency and using it as sort of an acceptable currency in the country. On the other end, you might have, you know, a place like China that is really moving rapidly in a CBDC model and really pushing to tamp down cryptocurrency altogether. And most countries, I think, fall somewhere in the middle of that, which is that they are tolerant of cryptocurrencies, but don't view them as equivalent to fiat currency. And they are focused on developing stablecoin or CBDC models and are intent on sort of driving those. So I think that's the spectrum around the world.
Excellent. Just mindful of time. We've got about 4.5 minutes left here. Alexei, anything further to add from the perspective of a central banker as it relates to El Salvador's decision?
I will be probably even more categoric than our other speakers. As Mark said, crypto doesn't pass currency test, and from economic standpoint, from the central bank's perspective, they are not money, can be regarded as a form of digital monetary surrogates. The monetary surrogates create very significant financial stability risks and inevitably undermine the efficiency of the national monetary policy. For that reason, the Russian legislation directly prohibits issuance of monetary surrogates and posits that the only legal tender in the Russian Federation is the Russian ruble. Of course, El Salvador's sovereign choice in 2001 was to abandon its national currency in favor of the US dollar. Now they make the sovereign choice to introduce Bitcoin as a legal tender, but I seriously doubt that any large economy is willing to follow that route, as it carries significant risk to financial stability and monetary policy.
Very clear. I want to spend just a minute here, Matthew, back to you on a recent decision with Visa to work with USD coin, which is a stable coin. Help us understand how your team got comfortable with that decision and how that plays into a broader strategic narrative for Visa. And then I want to finish up with just a broader question on the future of the financial system and how all of these pieces intersect and your views 5 years, 10 years down the line. If we could do that in 2 minutes, it would be amazing, but let's give it a shot.
Yeah, no, absolutely. Look, I mean, if you look at what we do as a payment system, you know, we have about 3.4 billion users, consumers, about 70 million merchants globally, and we view our job as enabling commerce and allowing people to sort of pay or be paid. When we began to look at what stablecoin and central bank digital currency were going to be able to accomplish, we thought that we could look at them as equivalent to other currencies in our system. So today we have 190 different currencies in the system. We can perform exchange commerce between them, and to some extent we can add one more or two more when USDC or other things are created. And so we went into the core system of Visa. We added the ability to exchange stablecoin or in the future CBDC over our existing network. And we built models so that consumers and card issuers and others could interact on one side of our system using existing technology, and merchants could choose to be settled with or paid out using those currencies on the other side. So to some extent, we were able to use our existing platform, our rules, our brand, our respect for sort of rule of law, AML, KYC, and other things that make us a trust network, and incorporate these new technologies into them. And when we found that that was possible to do, that's what got us comfortable moving forward from an innovation standpoint. And those are some of the partnerships you see happening today, and live transactions that you see around the world today.
Very good. I want to come, Mark, to you. Prognostication, we're in 2025, we're in 2030. What does the payment ecosystem look like at those markers?
I mean,
then Alexia, come to you.
Okay, we often talk about our multi-rail strategy. So, you know, there's cash as a rail, there's the card rail that we've been running for 50 years, there's account-to-account rails. They've also been going for about 50 years. We used to call them ACHs or checks even before that. But they became real-time a few years ago. And then there's this new generation of, or another rail, it could be blockchain, it could be something else, on which different types of currency can run. Our job is to, as Matthew said, is to help people pay and be paid in any way that they want. And we want to offer as much choice as possible while making sure that we have a level playing field, that we have competition, and that we have an incredibly secure and resilient payment system. So I don't think it's going to look dramatically different. I just think it's going to be more digital.
Very good. Alexi, in the last seconds here, would you concur with Mark's view of the future as it relates to Russia?
I would concur with the overall landscape. I think the general direction is very well established. Maybe I'll permit myself a small, more skeptical comment about the merits of the stable coins. Frankly speaking, as we heard from Steve Wozniak at the start of today's event, he reminded us that the business rationale for the ecosystem is to generate additional profits through making customers and providers captive to the ecosystem. So my concern is that the bundling, explicit or implicit, of the mean of payment in the form of the ecosystem stablecoins with the goods and services provided within individual ecosystems will sort of further cement this siloing of the electronic wallets, which Matthew already talked about earlier in today's discussion. And I will permit myself to quote from a recent BIS working paper by Arner, Auer, and Frost. It was published in last November. And here I quote, "It is not clear that stable coins are necessarily needed to provide some of the benefits that they purport to serve. CBDCs may offer these benefits without the inherent fluctuation in value of or conflicts of interests entailed by stablecoins." And that's the end of the quote. To me, this is a very fair assessment and a good guidance for thinking about this fascinating topic. Thank you very much.
Terrific. I want to thank all of you for joining us, to our audience as well. We covered a tremendous amount of ground, and we anticipate more changes to come in this very vibrant space. Thank you again. Back to the host, and wishing everyone a terrific rest of this conference.
Thank you very much.
Mr. Blake, dear speakers, thank you for your contribution to Cyber Polygon.
If you go by that, I'm not selling my XRP.